Hey traders, good morning and welcome to your April 15th Forex rundown. I hope you had a restful weekend, because this week is shaping up to be a busy one on the macro front. We've got several market-moving events coming up, and after last week's surge in US inflation data, central bank speculation is back in full swing. Let's break down today's top Forex news, check in on the charts, and talk strategy for the week ahead. 1. US inflation still too hot for the Fed's comfort. Last week's March CPI report came in stronger than expected across the board, with core inflation rising to 3.9% year-over-year. That pretty much wiped out any hope of a Fed rate cut in June. Traders are now pushing expectations toward September, if that. The US dollar index, DXY, jumped above 105.60 on Friday and is holding steady this morning, reflecting the market's shift in rate expectations. 2. ECB faces a tough balancing act. Over in the Eurozone, Friday's remarks from ECB President Christine Lagarde were a bit more dovish, citing clear signs of disinflation, but she also warned of geopolitical risks stemming from the Middle East and Ukraine. With inflation cooling and growth lagging, the ECB could pull the trigger on a cut before the Fed, maybe as early as June. That divergence is putting pressure on the euro. 3. BOJ still under pressure as yen weakens. The yen is back in the danger zone. US dollar to Japanese yen has climbed above 153.50 this morning, its highest level since 1990. Japan's finance ministry has warned they're closely monitoring the FX market, which is usually code for potential intervention. No moves yet, but traders should stay alert. Technical analysis, Monday levels to watch. Euro to US dollar. Current price, 1.0630. Resistance levels, 1.0675, 1.0720. Support levels, 1.0600, 1.0555. The euro broke below 1.0700 late last week and has been bleeding lower since. The 1.0600 handle is key. A clean break below opens the door toward 1.0550. Momentum indicators are still bearish on the 4H and daily charts. If we see a bounce, 1.0675 could be the first real resistance to test. Pound sterling to US dollar. Current price, 1.2440. Resistance levels, 1.2500, 1.2575. Support levels, 1.2405, 1.2340. Cable has been tracking the euro's weakness. Friday's dip below 1.2500 confirmed bearish sentiment, and the pair is struggling to reclaim that level. Watch 1.2405 as the next potential support. If that breaks, we could be heading toward 1.2340, especially with dollar strength continuing. US dollar to Japanese yen. Current price, 153.65. Resistance levels, 154.00, 154.50. Support levels, 152.85, 151.60. Dollar yen is flying, driven by rising US yields and persistent yen weakness. Intervention risks are real, though, so this pair isn't one to chase blindly. If we break above 154, watch for sharp, sudden pullbacks. Any hint of BOJ activity could trigger a fast 100-plus pip reversal. Forecast and outlook for Tuesday, April 16, 2025. Looking ahead to tomorrow's session, all eyes will be on UK employment data in the early hours, followed by US retail sales at 8:30 a.m. Eastern Time. What to expect? UK jobs data. If unemployment ticks up or wage growth softens, the BOE might be pressured to start easing. That would likely push pound sterling to US dollar lower. US retail sales, a strong reading would further support the higher for longer Fed narrative. That could boost the dollar across the board, especially against the euro and yen. We're also keeping an eye on Fed speak, with New York Fed's John Williams scheduled to talk late in the session. Any hawkish tones will likely reinforce dollar dominance. Trader tips: how to navigate the week. Watch for divergences. The ECB and BOE are likely to cut before the Federal. That's creating some clear divergence trades. Short euro to US dollar and pound sterling to US dollar could remain favorable, especially if US data stays hot. Don't chase US dollar to Japanese yen too aggressively. Yes, it's flying. But we've seen this movie before. The BOJ can step in without warning. Use tighter stops or consider trailing stops if you're long. Use event risk to your advantage. US retail sales and UK employment numbers will likely bring short-term volatility. Be patient. Let the dust settle and look for high-probability setups with clear breakouts or rejections around key levels. Tighten risk with macro volatility. Geopolitical tensions remain a wild card. Gold is holding above $2,360 and oil is above $90, reflecting underlying unease. Protect your capital and avoid over-leveraging heading into uncertain macro weeks. Final thoughts. The dollar remains king, for now. But this week's data could either reinforce or shake that up. It's a great time to stay nimble, respect the trend, and stay sharp on your levels. As always, trade with discipline, and don't try to predict every move, just react smartly when the market speaks. Catch you in the next update, and good luck out there.